All right, everyone. So let's start with going through the market structure fundamentals. This is very important. I can tell you that this will determine whether you're going to get your directions correctly or wrongly. So you have to take this topic very serious. Market structure fundamentals. And this basically covers things like you being able to mark your structure correctly, knowing when price is breaking structure or is totally changing direction. And that is why you need to pay attention to everything I'm going to show you here. So we all know that we don't want to trade against the trend. And if you're trading against the trend, you're obviously putting yourself at a risk, right? So our goal is to always trade with the direction of the trend because we assume that the trend is what the smart money are riding, where the money is going to. So take price as an entity that has its own will trying to achieve an objective. You see, the chances that you're going to change the direction of the market as a retail person is very, very low, right? So you have to find a way of riding with this guy. So what we try to do is that we try to sell when price is in a downtrend, all right? You can see this is a downtrend. And we try to buy when price is in an uptrend. So basically, every time you come to the market, these are the three conditions you will see the market in. Price will either be uptrend, downtrend, or this is range or consolidating. All right. These three conditions are what you will see market do. You will not see market in any other condition apart from these three. All right. So what I want you to do now is to pay attention to the next thing I'm going to say. In your own way, do not engage the market when it is consolidating. You can get some information out of this, but then our own approach to the market, we don't trade ranges like that. I know some people do trade, they buy when it is down here and they sell when it is up here. But then that is not our own approach of the market. The system we use thrives more when we have a trendy market. Let me repeat that. The system we trade thrives more when we have a trendy market. So as much as possible, keep yourself under check. Always look for a trendy market. If it is not trending, it means that you don't have a trade for that day. And you see, this is also very important. There are some of you that you always want to be taking trade. You always just want to be in the market. There are days you are not supposed to trade. All right. So this is a downtrend. Why? Because we can see that price is creating a lower low and a lower high. All right. This is a lower low and a lower high. So when we see price printing such a pattern, we are fully aware that this is a downtrend. Why? Because every time price takes move, it creates a new low. Let's say this is the low we are looking at. Price never comes here. We create a low once we go below it. All right. Now, let me tell you this. In marking where your low is, you're going to have a series or you're going to have number of candles around the low, right? You're going to use the wick of the candle. That is what you're going to use. So you pick your horizontal line, put it here, right? Drag it to the right side and put it right there. Look out for the break of that level. If price successfully breaks below that level, then you have a break of structure. Now, let me also reiterate on that. The break of structure is only set to happen when you have the body of this candle closing below this line. The body, not the wick. Let's say you just wicked out and came back and closed here. You did not have a break of structure until when price finally breaks and close with the body of the candle, right? So a structure is set to be formed when we have price move from area A to area B and have a retracement up. Then the next push, if we break this level, let's assume this is just a record, all right? This guy is an athlete. He decided to run from this to here, and then all of a sudden he's tired. He's now going back to take a rest. And now he's taking another move. Boom. Now he breaks the previous record. So this is the previous record breaking. So this is a break of structure. I hope this is understood. You're not going to have a very perfect price action like this on your chart. Trust me, you're not going to have a very perfect price action like this sketch on your chart. But then we're going to find everything similar to what I'm doing here. So as price breaks, we have a new level now from here to here. So this is what other people call a range. Okay, this is what other people comfortably call a range. Why? Because price comes and it broke below here, it created a new move and a retracement, push, retracement, push, retracement, push. Now, at some point, price is going to consolidate it. It will neither give you higher highs and higher low. It will just be in a specific direction, pumping up and down, up and down. In this situation, we hold on. We don't have a defined direction. All right. Even though we are coming from the downtrend, the chances that the energy from the down is still there, but because we couldn't break below this guy, we don't want to take action. So this is going to be a rangy market. Sometimes you're going to have price even push like this. It's not as smooth as what I'm sketching, obviously, guys, right? So price is going to come and change direction. Now, there is difference between a break of structure and a market structure shift, or what other people call change of character. There's difference. A break of structure, we only use the term break of structure when we are heading in a particular direction and we are breaking and you're creating new lows or new highs. All right. So break of this structure, we have this. Break of this structure, we have this. Break of this structure, we have a continuation. So every time we see a break of structure, we know that the trend is still active. There is energy in that direction. We just finished a topic about momentum, right? There is energy in that direction. But then when price is going to change direction, a shift in structure, you're going to see a different turn. Now, in a shift in structure, now we are dealing with a downtrend, right? Let me just make this sketch a little bit. Okay, let me just continue with this. I'm going to show you what a market structure shift is. Now, for an uptrend, we're going to see price creating higher highs and higher low. When we break this guy, we have a break of structure. We call it break of structure. We break this guy, we have a break of structure. We call it BOS. When we break this guy, we have a break of structure. We call it BOS. When we break this guy, we call it break of structure. We have BOS. So we keep going. So in this situation, what this guy is telling us is that we have opportunity to keep buying. I hope you understood that, right? Now, even though I am not supposed to show you this, but then in the liquidity topic, when we finally reach liquidity, you're going to see that price is either always targeting a higher time frame liquidity. That's the objective mostly. Liquidity is just like the magnet that attracts price. So if price is insisting on going in that direction, there is probably a liquidity level probably up there. And you have to pay attention to everything. As price moves close to the liquidity area, you are either going to see a slowing down in the energy, or you're going to see the energy reducing as price approaches that liquidity area. It is going to reduce in energy. And this is one of the things you're going to see. Price is going to either reach out for the liquidity and turn back. Now, notice this. If price is creating these higher highs, higher highs, higher highs, higher highs, where your eyes should be on is on the higher low before you can call a shift in market structure a valid one. The higher low is the only thing you want to watch out for. So as price keeps creating higher lows, you do not have any reason to doubt that movement. Even though price will have a failed swing, you should still consider that as still bullish until when you finally close with the body of the candle below the last higher low that price created. So once price creates this higher low, this one is not important. Once price creates another one, this one is not important. But the moment price comes and create another one and then it crashes below it, this we call a market structure shift or a shift in market structure. If you don't understand this, pause this video, repeat what I just said and check it again. So let me repeat that. Price is going to reach a point where all the reasons to keep going up has been exhausted, and it will take a turn by closing the last higher low it created in an uptrend turning to a downtrend. There's always a transition from an uptrend to a downtrend. So in that situation, we consider this as a shift in structure. Now from here, we can confidently start considering an opportunity for a sell. So in this regard, most of the time price can do something like this and continue downward. Sometimes it will wrench a bit before it continues downward. So this is a confirmed bearish movement from an uptrend to a bearish movement. I hope this is understood. If you don't understand this, repeat the video, send me a message on WhatsApp and I will repeat the same thing I said. All right. Price will now reach out for a level, either a point of interest, whatever it is on the left hand side. I'm going to teach you the power of the left hand side during the top down analysis video and the right hand side of the chart. There is the left hand side of the chart and the right hand side. So most of the time when price is reversing or is changing direction is because a left hand side target or objective has been achieved and price is now finding reason to turn direction. Likewise, when price finally comes to a level downward, it is going toward change direction, do something like this. You see that? So can you see that price reached a point? All right. Now for a downward, the attention is going to be on the lower high. This lower high, lower high, lower high. The moment we take out the last lower high we created with the body of the candle, if the body closes above this guy, we have a market structure shift bullish. I know some of you are still confused, but then if you're confused, I think you have to hold on and look at it again. All right. So if I go to the chart, actually, you're going to see it perfectly. So this is it. Price shifted structure. Now the chances that price is going to turn direction is very high in such a situation. You're not going to see a continuation in downward direction. So please pay attention to that. All right. So this is one of the ways you can see that. And then every time, this is what we popularly know in the market, there is an impulse swing of the movement, which is mostly this move for an uptrend, and then the correction or the retracement phase. Now, I am going to say something very important, which is going to be very, very important. If you don't pay attention to this, you're going to make a lot of error. For an impulse swing, there is no minimum number of candles. But for the correction or the retracement, or what other people call pullback, there is a requirement of candles to be considered as a valid retracement. So, because we're going to be dealing with movement to create a high, because once we create a high, we want to be sure that that is a high. All right. Now, there is a reason why I'm telling you this, because at some point you're going to have trouble identifying what it is that is a real break of structure or a shifted structure. All right. So what you have here is a price impulse swing up. All right. And a correction. But then there are some market movement that you're going to see them. They are not, some of you use one candle, like you just use some kind of just one candle and call this is a shifting structure, this is a break of structure. That is why you have a lot of error. So for a retracement to be valid, you have to have confirmation. Mostly when you have the last bullish candle, this is an uptrend, right? The last bullish candle like this, you have to calculate for the next one. We have 1, 2, at least 3 candles. Or alternatively, there are some huge candles that have bigger momentum that can be considered as a retracement, even when they are just one. I'm going to show you an example of that when I go. Now, this could be a sell candle, right? Let's call them bearish. So for you to consider this as a valid retracement, you need at least, especially when the impulse swing is very, very powerful with big candles. You need the first one, which is mostly close to the last green candle, and then the second one, you have to see the body of this second one close below. Let's say the wick is like this, and this wick is like this wick is like this, right? You have to see it like this. Where's the close of this candle? Is here. This is where the close of this candle is. All right. And you have to see that the body of this candle, let me make it larger so you can see that the body of this particular candle closed below the body of this one. The same thing for the third one, closing below the body. This is the close, right? And the body is basically up here. So it's just the body. It doesn't have to close below the wick. All right. It doesn't have to close below the wick. And I'm going to show you why this is important, because at some point you're going to have a lot of erratic movement that you need this to validate. So when you have this, you can call this a high. So when this one is broken, we have a perfect high, and you can use it as an example of what we call a break of structure or market structure shift. Is only for the retracement, not for the impulse move. The impulse move can just be one candle, all right? So it's only for the retracement. So let me just quickly show you my chart so that you can see how these things often become a reality. So looking at this, I just want to show you how price move on the real chart. You're not going to see these things happening like the skate. They're going to be a real market scenario, right? They're going to be a real market scenario. So you have to be very careful in the way you mark them, in the way you do them, in the way you approach them. So you have to pay attention to that. So starting from this level down to here, then we continue upward because we had a perfect example of downward to upward, right? So starting probably from here, let me use this guy and call this probably a break of structure. Just starting from there, price is moving downward. Remember, we said that break of structure is always going to show us that the trend is still active. Price broke structure. What do we have? 1, 2, 3 candles, at least minimally, and we have even up to 4. So this is a perfect retracement into that level. Perfect. The same thing, we have a high here, we have a low here, right? So did we break below the low? So in marking out the low or the lowest area, we look for the wick. Just down here, you just look at where the low is formed. That is where all the other guys are. You sample out the lowest wick here. It doesn't matter whether it's a bullish candle or a sell candle. You look for the wick that has the lowest area and take it all the way to the right hand side. And just take a look at it. Did we close with the body of the candle on the right hand side? Yes, that is a break of structure. And you will notice that every time price breaks structure, the chances that price is going to go back above the high is low, because that is ensuring that there is energy, there is momentum in the direction. So break of structure and what? Price moved all the way down. And now some of you, before you used to consider this as a retracement and you call this another break of structure. No, that is not another break of structure. This is not up to 3 candles. So this entire move is just one movement. It doesn't matter the time frame, and we're going to talk about time frame eventually. It does not matter the time frame. Any time frame, we have to apply this. All right, we have to apply this to every time frame. So from here all the way down here, we have another low here. All right, you see that? So we drag it all the way to that area and see if we have price breaking that level. Is that a break of structure? It is, guys. It is. Now, the next one is what? This one. Can you see this guy? Can you see this low? Now, in this regard, you can see that we have a very, very tricky area. We have just one candlestick, but then compared to all these big candles, can this one candle be considered as energetic enough to be a retracement? Obviously no. We just had a stop here, so I wouldn't consider these as a low. This guy, I wouldn't consider this as a low to call this a break of structure. So what you would do is that this entire movement is a single movement down to have a new low here. So this new low, you look for the lowest, which is this week. Let me bring it to your perspective, which is this very week, and take it all the way there. You can see that price retraced. This is 1, 2, 3 candles, perfect retracement into a fair value gap, which is this one. We're going to talk about the institutional reference point in the next module. So don't worry, I didn't mention any of them, just mentioning them randomly. So we have a new break of structure. Do you see that? This is a new break of structure. What do we have? Price came, and what else do we have? We have 1, 2, 3 candles. Notice what happened. You will have, at some point, you will have even a sell candle in between the 3 candles. They don't have to be arranged in a sequential manner, or they don't have to just follow each other. You can have some sell and buy candles among them. For example, this one, we have the first one closed here. Where's the next buy candle closing? Here, up here. Where's the next buy candle closed? Here. So that is a retracement, and the highest wick is here. So we're going to put, this is our lower high, and if we have this movement down, we have this wick, this is the low. We can drag it all the way to this level. So notice what happened here. This is very important. All right, from this low we have price move, and then this is like a news coming in. So we can decide to move our low here. Since this is still in the same area, though the news distorted that one, we are not going to always have this trouble in our chart. But then in case you see that, you can use this guy as the perfect area. You don't have to even worry yourself. This can just be your level of the low here. Don't worry about this one. All right, I'm just showing you so that you don't get confused at some point. So this is your low, for example. So if you create this, do you have price closing below it? Yes, you have price closing below it with just a movement. So that is a break of structure. It doesn't matter. Price whipped out into this guy and is now moving in that direction all the way down here. Now, notice something here. After price came here, it quickly came back up and it closed above what? Notice what happened here. The level we have here, this guy becomes our new lower high, and that guy being this very, very massive from price, you can see we have this candle, Is this last tiny one a bullish or a sell candle? It's a bullish candle, guys. Can you see it? So we have 1, 2, 3. So we have 3 candles retracing in that direction. So we can call this a what? A retracement. So we look for the highest week, which is this week, which is the highest week. So if you see this, I hope you've seen this. It's a green candle, right? It's a green candle. So it closed above this guy. So that you don't get confused. So this is the massive movement that we have, and we can call this level our lower high. And if we close above it, we have closed into a market structure shift. Now, notice what I said. If we are shifting direction from a downtrend to an uptrend, our attention should be on the lower highs and only the lower highs. If we close above the lower high, we have a market structure shift. So if price creates a market structure shift, it is expected that we are not going to see price coming back below here again. We are not expecting to see price go below there. So from that level, we have price retracing, not inside here for now, not inside here. The highest point is here, and that is a break of structure, right? You look for a retracement. How many candles do you have? A minimum of 3, and mark the highest level, which is this one. Did we close above it? We closed above that guy, which is a break of structure, guys. All right. That is a break of structure. It does not matter, break of structure, right? So this is a retracement. So internally here, some of you will begin to put your lines here. This is the high, all right? Price retraced, boom, creating a higher high instead of a lower high. So market structure into the new direction. And what is this? Do we have a retracement here? Yes, you have a 3 candle, 1, 2, 3. So this is a break of structure. So every good and perfect break of structure will always hold price regardless. So notice how price is not even coming below this area. You see that? So break of structure. So here is an example with just 2 candles for the sell candles. So this guy, you see just 2 candles, right? 2 candles. And these 2 candles, if you look at it just from the perspective of this area, you can see that the green candles here, we have 3 green candles that are 1, 2, 3, and just these 2 candles have covered these 3 green candles. So if I am looking at this from that perspective, I will consider this as a retracement because they are big enough. They are almost equal energy. Remember, we talked about momentum and pressure. So these 2 candles can be considered as a retracement. There are some candles that you look at them from the environment and you know how energetic they are, how strong they are. Sometimes there's even one candle, a massive candle that can cover at least 4 to 5 of the opposite direction candle. All right. So you can consider that as a retracement. So this can be a break of structure. Please, if you don't understand this, repeat the video. You can have just one candle that is very big, and when you consider it, you will see that that candle has covered a lot of smaller candles that are supposed to be in the opposite direction. So that can be a retracement. So we can have just 2. If you see, we have these 1, 2, 3 green candles. We have 2 of these guys have almost like covered these 3 candles. So this is a break of structure. So we have another move up to create a high, and then what do you see? We have a high here and a retracement. So this is the higher low, and it has been crashed below. It closed with the body of the candle below it. And what do we consider from here? That is a market structure shift in the bearish direction. So you're going to see this many of the times. So you see that price creating a market structure shift, even though it did a break of structure here first. So when price does something like that, if price finally crashed below this guy, you can now tag this guy as a liquidity run. All right, as a liquidity run. The difference between a liquidity run and a liquidity sweep is that liquidity run sometimes go and close above the liquidity area with the body of the candle. It creates a break of structure actually. So that's a liquidity run, and a liquidity sweep is just the wick of the candle, and then it's going to quickly close below it. So from here, you can see that we had a few sell opportunity. That's a sell opportunity, even an attempt to go that, but then it created another shift to the bullish side. This created a break of structure because we closed there, but we couldn't do that. So we have a lower high. We closed above the lower high. We now continue upward. This is a break of structure. This is a retracement with just two candles. You can see two candles have covered three candles that are enough to be a retracement. You see three candles here. Just two candles have covered them. So a break of structure. This one candle is not a retracement, so you don't consider that. As you continue in that direction, you will see retracement, a shift in structure in the bearish direction. We have one, two, just these two candles have covered like 3 to 4 green candles. So some of this area is a shift in structure and a break of structure because this is a retracement, 3 candles in the upward direction. So the moment you shift structure from upward to downward, the next move is going to be a retracement in the upward. All right, this is a retracement upward, a break of structure here. All right, so 3 candles, a break of structure here. You see that? So as price does this, you're going to see a lot of these time and again and again. We're going to do a lot of market structure, and I want you to pay attention to every single detail we have, and I'm going to show you more. This is just the basic, the first thing to know. All right, there are advanced ways to do that, but I'm just giving you the basic. In the next videos, we're going to see how to do it in a very, very concise way and get it perfectly done. All right, so see you in the next video, guys.